This channel is for educational purposes only. We show you the how-tos. This should not be constituted as financial advice. Please contact a professional in that area to let you know what you should do with your money. Tonight, we're talking about getting cooked. And you're the dressing. You are the main course. If you had a student loan that was converted from a fixed rate loan, which what I had, to a student loan that was bought out by a particular company and changed into a variable rate. What was the bottom line of that decision that you had no part of? It was forced on you. What do you think was the end result? Stay tuned to find out. Shocker, you owe more money. I didn't know how bad it was. I mean, I already knew that anything that adjusts is a bad idea, especially when you're talking about loans, because what it means is that you're going to be paying more in interest on that loan over the life of that loan. And with adjustable rates, like the adjustable rate mortgages, and with student loans, unfortunately, with variable rates, whenever the lender decides it's in the best interest of us to raise these rates because we can, you are stuck. Nothing is going to make this clearer to you than letting you see my own statements. Now, if you were one of those techs like I was that had to stay on top of the game, you went back to school after your initial 4 years of college were done decades ago. You went back and got a couple more certifications. Those certifications aren't cheap. They're just not. I got two. Am I using any of them now? Nah. But the end result is this: $12,000 worth of student loan debt that was first with the federal government fixed at a 6% rate. Then, when the federal government decided to get out of the student loan race back in the Fannie Mae days, this is around that time, another company came along called Nelnet. Interest rates were still fixed, but something happened in between then and now. Something bad. Some corruption was going on. Now, even though those loans were fixed and COVID happened, you got yourself a forbearance, that interest was still piling up. It was fixed interest, but it was still piling up. You didn't pay anything, but the interest was still growing. Flip the script to today. Nelnet has agreed to plead guilty to whatever they were charged with. Another company, which shall right now be nameless, took those over. But there was something in the mix that I didn't pay attention to, that many of you didn't pay attention to, and it was the transition from a fixed interest rate to a variable interest rate. Now, with all the talk of the previous administration trying to kill student loan debt for anyone who owed under $20,000, which I was in, that would have been great. But it didn't happen. It was challenged by one group of politicians and defeated. End result, you're going to pay what you owe. Okay, cool. So starting back in July, I started making these payments. With the amount of money I owed, my student loan payments were about $100. I have made them not since the deadline. The deadline to make those payments was back in September of 2024. I started making those payments 2 months beforehand, just so I can get back in the swing of things, right? Over that time, the principle was this. 3 months later, the principle is this. Look at these numbers. how much of that payment actually went to the principal of the loan during this rate adjustment? All of it. And there's no getting around it. In other words, for 3 months, you've been making your payments on time without fail, all 100, 200, $300. Okay, cool. Your principal balance actually increased as if you hadn't paid a dime. Now, it just didn't go up as fast as and as high as it could because you were paying. But to pay into a loan for 3 consecutive months without fail, no amortization schedule to speak of, just to be $80 more in the hole, that is nasty work. And this is the pinch that a lot of people find themselves in their mortgage when we're not talking about $100 a month. We're talking about $3,000 and $4,000 a month, and their principal is not going anywhere. Interest gets paid first, and that is the thing about finances that a lot of people, especially where I come from, weren't taught this in school. You didn't get it firsthand. I was fortunate to go to a business school in high school in Springfield, Massachusetts. Shouts out to the Commerce Red Raiders. I was fortunate to go to Westfield State College, now Westfield State University. Shouts out to the Owls. Took some financial classes. I know how to balance some books. But what I do not understand is how a political decision to sell off your loan translates into a variable rate from a fixed rate. How did that happen? Why isn't anyone talking about it? At least I haven't heard anybody talking about it. What does that mean for every American who is now not only not getting any student loan relief, but you have the present facts that you are getting further and further in debt despite paying your student loan premiums? You're just going to have to pay more. If you can, and like what I plan to do, is to cancel that debt, just like I canceled everything else, as fast and as efficient as possible. Otherwise, you're just giving your money away in the form of interest. Let me know what you think about this video. I will talk to you soon.